Rules are changing the 6th of April about the tax bans affecting every business owner, director of a limited company, side hustle business, etc. £12,570 is the number you're going to hear a lot on YouTube and social media as the amount to take out of your business as a salary. But just before you do that, just make sure that's the right decision for you and don't let the tax tail wag the dog. Neil, we talk a lot on this channel about accelerating people through starting up in the early stages of business ownership. This feels like a great one off. Everyone seems agreed on £12,570. That's the salary to take out. It's most tax efficient, etc. However, we want people think about, and we've got a tool that will let you run through some different scenarios, etc., of why that might not be the best decision for you. However, just to start with, why is that number constantly sort of flagged as this is the thing, salary to pay yourself?
It's because it's the income tax band. So the first £12,570 that you earn is tax free. So that means the company will get a deduction for paying you that salary and you won't pay any income tax. So we've got a spreadsheet which will show you exactly what tax or what HMRC will get. They'll get some employers' national insurance, they'll get some corporation tax, but they won't get any income tax. So that's why that figure is the most tax efficient. But
there's some simple examples of where that might not be the best thing for
obviously
you.
One of the assumptions is it's a limited company and that's how you're paying yourself. But if your entity, what you're doing is a side hustle, so you've got a salary somewhere else, or you've got other forms of income, whether it's a rental property or whatever else, that would have a distortion on obviously the amount of tax you end up paying. And you probably, from a tax efficient point of view, you probably don't want any salary if it's a side hustle, because you're already earning, if you've got a job and you're earning elsewhere. If you have more than one business, that 12,570 doesn't apply to everything you're involved with. It only applies once.
Yeah. If you have more than one shareholder, again, in this.
Yeah. So I think if you've got more than one shareholder, if you've actually looking to seek investment, if you're looking to build, it's not just a business an entity as a route to get income for you, but you're actually trying to build a business for an exit or build a business and reinvest and whatever, then those things mean that you need to take a slightly more...
And that's almost a bit back to where that number came from. It sort of came from like contractors taking money out, one client, etc.
Yeah.
Just take all the money out. So that's where that sort of part of the tax band is one, but that's part of where that industry sort of...
Absolutely. There was a whole accounting industry that was set up that said, IT contractor, you go and got a job with a bank or whatever, you're earning six-figure sums very often. The bank force you to form a company because they don't want you on the payroll. How am I going to take my money out of the company? Hey, pay these accountants a certain amount of money every month. They'll do everything. And every IT contractor, particularly if they were overseas and had come to the UK to work for a few years, that was the figure. Because one of the issues is, if you are British, going to stay in the UK and look at sort of social security benefits, your retirement pension and those sorts of things, if you haven't paid into the pot, the national insurance, then it can impact or will impact what you'll be entitled to when you come to draw anything from the state. So that again is an example as to that 12,570 might work great for someone who's here for 3 years from Australia, just getting one big contract and touring Europe or whatever, but it might not be the best thing for you as an individual who is trying to at some point going to need to get a mortgage or rent a premises or do other things. Retire in the UK, what are you going to live on? So should your company be making pension contributions? Should your company be looking at life insurance for you and whatever? So there's a lot more nuance around sort of profit extraction strategies, as we would call them, than just 12,570 and the rest as dividends.
Yeah. And so, I mean, we're still looking to accelerate people through this decision. It's just as in we want to sort of add in a couple of extra steps just to make, they might get to the same answer, but there are just a couple of extra steps. We'll run through the spreadsheet here to show you what those are, but just don't do an immediate copy and paste just because either your friend's doing it or you've seen it so often across social media as this is the salary to pay yourself. Just take an extra 5-10 minutes just to make sure you're thinking through everything that applies to your circumstances.
Yeah, it's like you said at the beginning, it's such an easy thing. It's obvious 12,570 is the number. Yeah, there's a spreadsheet, it proves it, that's fine. But that is if you're only looking at a very narrow part of your life. And what are the other things? You know, and it's like with our bank videos, you know, ease of opening a bank account means people end up opening bank accounts with the wrong place. Yeah. And it doesn't mean those banks are no good, it just means they weren't right for you. And it doesn't mean that 12,570 is bad advice from anybody, but is it unique and specific to you? And it's like you said, it's the 80-20 rule. 80% of people probably can just do that and they'll be fine, or they do it for a few years knowing that in the future that does mean I haven't been making pension contributions, or I'm going to need to check, you know, my lease expires in 3 years' time. I need to be thinking about what I'm going to do to be able to rent a new place or get a mortgage or whatever it might be that are, you know, specific to your circumstances, rather than just, hey, one size does fit all, because generally it doesn't.
It doesn't. Okay, so this will hopefully explain it better in terms of, as I say, the link will be description, throw the numbers in, play away with it. But if we take that sort of simple example to start with on the spreadsheet.
Yeah, so, you know, this spreadsheet, and there'll be similar versions, and, you know, that I'm sure other people will be offering as well. Ours, we've sort of set it at, in this example, and when you get it, it's set as your business is making £50,000 before you decide what you're going to take out. So there's 50,000 available to be paid to you. That's what's set up. You can change the numbers, and it will work.
It's a limit. The limited company is the other assumption. As the numbers gets higher in terms of particularly getting into six figures, we'd say that you should be getting advice in terms of you're pulling in that amount of money. So there are assumptions which will just stick up there, which this spreadsheet's based on, but it should give you an idea of what the steps to look through are. Yeah,
exactly. Yeah. So it's a good way to just illustrate the fact that there are other things you might want to take into account before you just jump in and take the salary. So we just come on, here's the spreadsheet, and as I said, it's £50,000 profit made by your business available to be distributed to you. 12,570 is salary, you'll have 1,136 of employers' national insurance. That gives you the actual profit that will be subject to corporation tax, the amount of corporation tax you'll have to pay, and the dividends you take out. So here, the individual has earned a salary, the dividends of 29,399, 500 of which will be at 0%, 28 will be at 8.75%. So you're going to take home £39,000, and the company, you know, the tax that's gone is the corporation tax, the income tax, and the employer's national insurance. So that's nice and simple, and that is, you know, for you to get £39,440 is 78.88% of your earnings take home. You can't do better than that from a tax point of view. The next figure that everyone will talk about is £5,000 salary, because that is when the employer's national insurance limit kicks in from April 25. So here, exactly the same. You made 50,000, you take 5,000 as a salary. The company then has made, there's no national insurance. The company's made £45,000 profit. There's corporation tax of £8,500. And here you'll see you made 38, you're going to take 38,967. The difference is £473, and there's a little summary as to where that's come from.
Yeah.
So that's the...
so why don't I just do that then in terms of...
And the reason, well, if we come on to, there's other examples, but you come on to the comparison here, you're £473 better off by taking the 12,570. You might not want to do that because at £5,000, there's no PAYE admin that is required at all. You're able to just do what you want to do. Whereas at 12,570, there will be some paperwork that you have to do every month.
Yeah. So that's a good small example of where, as in, yes, the monetary, but you might take that decision of admin, right, I don't want any admin.
Yeah.
And that is more valuable to you than, there's other considerations, but you could just take purely in that view, admin wise, I don't want any. So that 470 quid is worth it to me not to do any admin.
Yeah, exactly. And, and on the other side where we were saying about not paying national insurance or not making much national insurance contributions and stuff, what impact might that have? Which is why you might decide to take more salary because yes, there's even more admin, but there will, and more national insurance, but there are other reasons why you might want to do that. And for illustration, what we did here as well is said, right, the 50,000, take the 12,570 as the salary, because as we've said, that is the most tax efficient. Take everything else as a pension. That will actually mean effectively you retain 97.73% of your
Earnings.
of your
so
50,000
that's
earnings.
from a pure tax point of view, that is, I'm taking the most out of the company for me as I can. There's obviously just one slight problem, is you've then got to live off 12 and a half grand.
12 and a half grand, because the 36,000 has obviously gone into your pension. You can't get it until you reach retirement age and start drawing down your pension. But again, it illustrates that maybe some pension will be a useful thing for you to do in your example, rather than just all salary or dividend. Then, from a tax point of view, the worst thing you do is take it all as a salary, because you'll end up with only 35,000. So you end up with just over 70% of the total income being retained. And
But
there's a little
for your rent
comparison.
application, that might look the best thing in terms of a landlord who's looking at 2 employees plus you, who's paying themselves out a limited company, might prefer to see, I just want to see pay slips saying the same amount, knowing you can cover your rent every month.
Yeah.
And that tax-wise, it's not, well, there you go, you're losing over 4K. However, sadly, landlords, banks tend to look on classic employees much better than they do.
Yeah, I mean, obviously they take into account, if you own the company, they take that into account. So even if you're taking it all out of salary, you're still viewed differently to someone who's just got a third-party salary. But
and that, whether it's right or wrong, I mean, that's just the reality, unfortunately. And that gets probably worse if you're looking for a mortgage application versus a rent. That sort of distortion is probably even greater.
Yeah, absolutely. So 80% of the people, may well come down to the same answer, 12,570. But what we just wanted to do today was make sure people do stop, take a breath. Actually, is there something else I ought to be thinking about? Where can I find out about it? And then make a more informed decision than just, hey, everyone on the internet is telling me to do this, so I'll just do that.
Do that. Great. Hope that's been helpful. As I say, we'll put the links to the spreadsheet in the description. Hit the like button. Please check out our other videos on PAYE, which will talk through the sort of the employer's tax and the admin burden that's there if you choose to go down that route. As ever, we wish you every success with your business journey, and we'll see you in another video shortly.